Layoffs underway at the Internal Revenue Service as filing season approaches.
And the IRS could see a sharp drop in revenue collected this tax filing season.
We're hearing two reports of layoffs at the IRS. The first is that they're going to lay off 6,000 to 7,000 temporary workers. These are people that were just hired in the past year or two to work at the IRS as part of an expansion program.
Along with other federal agencies where there's staffing reductions going on since the new administration has come in, the IRS certainly has not been spared.
There are other reports, not confirmed, that the IRS is going to cut its total workforce in half. Remember, the IRS has about 90,000 workers, so that would mean 45,000 workers would be cut if that happens.
It's not quite clear how deep the cuts will be. Some of them are maybe reinstated because we're in the midst of a tax season.
The whole overall federal budget reduction coming from DOGE, the Department of Government Efficiency, trying to reduce the federal workforce as a mandate from the new Trump administration. And it's happening at a really inopportune time when you think about what's the busiest part of the year for IRS personnel. It's filing season.
Nobody likes the IRS, nobody likes paying taxes, but the fact is we need someone to collect the $5 trillion a year in income taxes that it takes to run the government. The question now is how to do that, and do you need so many people to collect the revenue? The IRS has long been a target, especially of Republicans, and their criticism is really twofold. The first, they think that the IRS is political, and the second is that they believe the IRS unfairly goes after particularly wealthy taxpayers, wastes their time with audits that take a lot of bureaucracy and paperwork, but never result in more money. There are some people in the White House and in Congress that don't even think the IRS should exist.
Donald Trump announces the Internal Revenue Service, and his goal is very simple. His goal is to abolish the Internal Revenue Service and let all the outsiders pay.
Every dollar that the IRS spends on enforcement returns between $5 and $12 in revenue that they get back. So when it comes to returns on investment in government, there are very few agencies that can match the IRS.
If we just think about that for 1 minute, if we care about saving money for the government, then going after the part of the government that actually brings in the overwhelming amount of revenue for the government would be among the last things that we would do.
Under the Inflation Reduction Act, the Biden administration Congress gave $80 billion to the IRS to add to its technology and add to its staffing.
And that money was to be spread over everything that the IRS does, starting with technology. The IRS has been ramping up hiring for the last couple of years since they got the additional funding from Congress, and now they're finding themselves having to reduce employment.
If you take a look at audit rates, especially for the wealthy, in 2010, your chances of being audited if you made more than $10 million were about 1 in 5. Now it's about 1 in 25. And the reason is staff. The IRS staff is about the same as it was back in 1997. That's when they had a lot fewer returns. So what the Biden administration wanted to do is bring that staffing back to levels where they could finally start to audit and understand, especially the very complicated returns of the wealthy. What the Republicans and the Trump administration want to do now is to say, we don't want as many audits. We don't want to hassle taxpayers, especially the wealthy, with these lengthy audits. And we believe, they say, technology and AI can do a better job than human beings in collecting these taxes. The problem is that where the real money is in the tax system is at the very top, and these complicated structures that the wealthy create with their fancy lawyers and high-paid accountants to avoid taxes from the IRS. So the question is, can machines and AI really unravel these complicated partnerships that the wealthy create to avoid taxes? We'll see. One of the problems that the IRS is trying to solve is what's called the tax gap. That's the amount of money that is owed to the IRS every year but goes unpaid. That amount is expected to be around $600 billion to $1 trillion a year. And the reason that people avoid taxes is because they think they're not going to get caught.
Senior tax officials are bracing for a shortfall that would be tied to changing taxpayer behavior and attempted IRS cuts by President Trump. The Post cites several sources in an article that says that the Treasury Department is expecting a more than 10% drop in tax receipts by April 15th compared to last year. That would amount to about $500 billion in lost revenue.
When it comes to tax evasion, that's illegally avoiding your taxes, a lot of it is from corporations, partnerships, these very complicated structures that the wealthy use to avoid taxes. Now, to understand those takes a lot of manpower and training. When you start to cut the workforce of the IRS in half, especially on the what's called compliance people, these are the people that go after tax dodgers, you're going to get more tax evasion, and that means hundreds of billions or even trillions of dollars will go uncollected every year, and that will only add to the deficit.
Research shows that tax cheating is something that is highly, highly concentrated at the very top of the income distribution. So the top 1% account for something like 1/3 of unpaid taxes.
I'm told that wealthy taxpayers and accountants that were undergoing existing audits, that those audits have stopped. And we know that they're not going to be collecting the money that may have been owed as a result of that. But more importantly, it means that for wealthy taxpayers, especially on partnerships and corporations, they know that there will be fewer eyes on those returns. And so I suspect more people will either not file or certainly push the envelope when it comes to tax law.
And what's worse, they will not have the resources to open new audits and open new cases. So the early warning signs are flashing. We can only expect the problem to continue to grow.
So what does it all mean for taxpayers? Well, it depends on what kind of taxpayer you are. If you look at average taxpayers, so far there hasn't been an impact either on refunds, the speed of the refunds, the amount of the refunds, or on customer service. That's when you call the IRS and you have a question. None of that so far, at least in this tax season, has been impacted, but we'll have to see going forward if they cut the staff by half, whether that continues.
Taxpayers should expect that the ability to call the IRS and discuss their situation with a live person is going to go away. The IRS has been working since they got the additional funding a couple of years ago to create more online access tools for taxpayers. So they've been planning to go away from person-to-person contact for quite some time, now that it's been sped up. So if taxpayers really want and need that person-to-person service, that's going to be difficult to get.
The big question now for the IRS is, will AI and technology replace the workers that are being fired? And AI and technology can do a lot, but can they decipher and deconstruct these complicated tax returns that are filed by the wealthy and by corporations?
The use of technology in tax administration it potentially could hold promise, yes. But it is not something that can happen overnight. It's a gradual process, and it's not clear that the technology is quite ready to be deployed overnight.
Well, the IRS collects $5 trillion a year in revenue, and so if their collections fall, even if the economy is growing, we're going to see bigger budget deficits and perhaps a need to raise taxes even more and cut spending even more to make up the difference.
My advice to taxpayers is, number one, don't rush to prepare your taxes. So when you're getting ready to file your return, the first thing is to do, look at last year, see if you've got all that information that relates, this year like last year, and then think about what changes occurred in your life. Then use electronic means to submit your return, whether it's a commercial software, a tax professional, the IRS direct file system. Then submit your return, use direct deposit, and then use the online tools the IRS provides for Where's My Refund to see what your status is. Electronic submission, electronic communication, and you should have a clean experience, not just today, but going forward.
If you're an everyday taxpayer that often gets a refund and relies on customer service, I don't think that part will be affected because that hasn't been where the expansion and the cuts are. What will be affected is the compliance and audits of wealthy taxpayers. We need to understand that people like Elon Musk, he paid $11 billion in taxes in 2021, does not like the IRS, nor do many wealthy people, nor do many people in government that think that the IRS has been politicized. And so I wouldn't be surprised if we see an IRS that is gutted over the next few years, and that will result in less revenue. The question will be how quickly they can implement new technology to replace all those people.